Hi everybody, this is John and Paul, and we're going to just have a quick little conversation on what's happened in 2016 and what we expect in 2017. From the real estate perspective that I represent, this has been a really challenging year. Seller's market with inventory in the range of 1.6 months to 2.5 months, which is just screams of scarcity and a difficult time for both buyers and sellers. Paul, how have you handled that situation?
It's been very similar on my end too. Where it's been frustrating is just the lack of inventory and the lack of choices, especially for the first-time home buyers, because most first-time home buyers don't have the ability to go for a price range, let's say in the 270, 280, 300,000 range. They're looking more in the lower 200s. And as you know, those are fewer and further between. And so you have to get a little creative as both the lender and the agent. And as far as the agent's concerned, you're having to show them, I'm sure, homes more in the outskirts and outlying areas, and letting them know that they may have a little bit longer commute than they normally would have if they were in the city. And on my end, what I have to look at is the percentage of down payment that they're looking to make, and also finding the right program to fit their needs that's going to not only meet the down payment but also get them that payment that they're looking for. And it involves creativity in the sense of the type of loan that they're doing, especially when it comes to the type of mortgage insurance that you have to pay when you put less than 20% down. I have to get creative with the type of MI premium I'm going to give them to keep their payment down a little bit. So yeah, it's a challenge, but that's why it's very, very important for buyers out there to work with an experienced agent like you, who's been in the business for as long as you have, and for somebody like me who's been in the business 20 years and is up to date on the loan programs out there and the different mortgage insurance options and different payment options to help make it affordable for these buyers.
Another way it's challenging for both of us is we've had several customers this year in a price range between 200 and 250, for example, where we might have to write 3 or 4 or 5 or 6 offers before we get the winning bid. There are just so many other buyers to compete with. So Paul and I will be texting all hours of the day and into the night, we need a new pre-approval letter, and I plug that in and start working the offer, and it can create some long days and a lot of extra effort to finally get you into a home.
Yeah, absolutely.
So I have to oftentimes counsel a first-time home buyer or somebody looking for a home is, you may not want to totally fall in love until we can get you secure in a purchase agreement, because you're competing with other buyers. It just brings us back to the point where it's critically important to be prepared before you get in the car and look at a home. Know what your financial capabilities are, know what your limits are. So hopefully we can get you into a home that's below your limits, but if we have to compete with other buyers, we want to know what your limit is so we don't exceed that. But if we can go up to it and you win the home, that might be what we have to do.
Yeah, exactly. And as touching on what John just said too, it's important that if you do find that right home, if it's a little bit above what your monthly limit is, to allow yourself a little bit of flexibility. For example, if you are saying you don't want to spend more than $1,300 a month on a house payment with taxes and insurance included, but this right home comes along and it works out to where your monthly payment is $1,340 and the home meets all your other needs, allow yourself a little bit of wiggle room and not discount and just throw this option out because it's $40 more than what you were budgeting. Maybe you can make some adjustments elsewhere in your budget and cut back some things in your lifestyle to get it to where you can still afford the house payment and, most importantly, get the home that you need or that you want.
Yeah, excellent points. One last point I'd say is, if you haven't purchased a home yet, hold off on buying that new car. It may look shiny and pretty, but boy, you'll love being in your own home and getting that home loan to go through. And wait till you've accomplished that, and then go look at a new car. Keep your old car running, or buy a good second-hand car that works well, but keep that car payment down, because that's prevented quite a few of my customers from getting the home that they really wanted.
Yeah, absolutely. Same thing with credit cards too. Do whatever you can to curb the usage of your credit cards so you can get those minimum payments down when we're factoring your debt ratio, and most importantly, when you do pay off or pay down some of your credit cards, it will enhance your credit score. And if you're qualifying, for example, for a conventional type of loan, that will afford you the best pricing the higher the credit score that you have. So, like John said, hold off on buying that car, keep those credit card balances down to a bare minimum, and you'll be in the best position when it's time to buy a home and start the home shopping.
Excellent. Well, that's it for this time. I'm John Slocum, Realty.
And I'm Paul Thompson with HomeStreet Bank. Thank you for joining us.